good loan officer is going to be able to work that out and find out where that perfect return on investment is going to be.
So our first question is, what are points?
Great question, especially in today's market, because most loans that we're closing right now do have what are known as discount points attached to them. What a discount point means, it's simply a certain percentage of the loan amount that you are paying to get a lower interest rate. So someone might qualify for an interest rate with no points that's, let's say, a 7.99, but they want a little bit lower of a rate, a little bit lower of a payment, or in some cases they need a lower interest rate to be able to qualify for the loan amount that they want. So that is when they would pay what's known as these discount points. And it can vary from day to day. It varies from rate to rate. It's not just an easy set, okay, I go from a 7.99 to a 7.875, and then from that to a 7.75. It doesn't decrease in a, what's the best way to say this?
Linear fashion?
Correct,
Okay.
yeah. Like just because one rate is a quarter of an interest point lower, a quarter of a discount point cost, then the next one is also going to be. So it varies from day to day. Again, that's why it's so important to have a really great loan officer that's going to kind of explain to you the difference, because sometimes, actually oftentimes, I'll find that, you know, the difference between 1/8 of a point in payment is not worth the difference in what the discount points are. Because in today's market, let's be real, everyone's going to be refinancing as soon as these interest rates do drop. So to maybe spend an extra $1,000 to save an extra $20 wouldn't really be worth it. Because if you're going to be refinancing in a year, that $20 only adds up to $240, whereas you spent $1,000 to get a lower interest rate. So again, you know, a good loan officer is going to be able to work that out and find out where that perfect return on investment is going to be. Now again, in some instances, it's unavoidable because some people need to get those lower interest rates to actually be able to qualify. But in a lot of times, if it's not necessary and if you're comfortable with the payment, let's go ahead and pay less points, take a higher interest rate, and then just save that money for when you can refinance and, you know, put that money in the bank for right now and make it work for you.
Jackie, thank you so much for the fabulous information. That wraps up our Mortgage Minute with Courtney Williams and Jackie Sager. And if you would like to know more about Rocket Mortgage and you would like to start your home buying journey today, click the link below. And we'll see you on the next episode. Bye.